Hi guys, welcome to the Bitcoin session this week. We'll look at, as usual, daily price actions as well as the Wyckoff Method analysis. Before getting into the details, disclaimer, this is for education and research purpose only and not financial advice. Please always consult your local licensed financial professional for financial advices. Let's begin. Okay, when we look at this daily chart, the volume bars are pretty encouraging, at least for yesterday. Today it's a bit weaker when it reached around 105,000. Again, these are psychological levels that probably a lot of people have their sell orders set. So that's a normal sign. But in terms of the bigger picture, it's a test for demand at those levels, and it's not easy given we've talked about this pink box a few times in the past few weeks already. So this is what I call short-term playground zone compared to the white, the long-term. So as long as it's above this resistance line of this pink box or below the pink box, there is a high tendency for the price to go back to the price zone within the box. So we've seen these a few times. So here we've got 4 days outside of the zone. Here I say 1 day for this one. So there are, or will always be, these kind of tests, and the way that you see in news or people talk about it is like a, what you call a bull trap and bear trap. Yeah. So what happens usually is there's like some price action setting a resistance line, and then suddenly over here it broke out. And then people will say, oh yeah, hooray, it's going to the moon, and then they set a bit of a bunch of long position, and then in 2 days time the price got pushed down, and then depending on whether they're practicing their trader what do you call best practice maybe, if they have set their stop loss or keep adjusting their stop loss, then they'll still make a win. Otherwise, you see this candlestick, it's not a small drop, I would say, compared to what we have over here. So right now we have this upward price action, and it's trying to stay above 100,000, 104,000. So from the price action perspective, like I said, my view is it's trying to test demand. If there's no sufficient demand, then it will come back to the pink zone. The triggering factor that will make the price go through or go down below the support of the pink zone would be some significant bad news. For Bitcoin, I would say maybe a big country or a large corp publicly say they're not going to adopt Bitcoin. It's not what the news we're seeing lately. There's more adoption news than not adopting. So anyway, this can be one reason. The other reason is probably the hash rate or the what do you say, the technical side of things that could affect Bitcoin, or miners side of things that could affect Bitcoin. For now, it's still pretty stable, I would say, in terms of news that we're seeing. That's what I'm referencing to. So the third factor is something that we haven't seen before, like Bitcoin's cyber security, how strong it is against cyber attacks or quantum attacks. Would anyone try to attack it now at this point in time, given it's a very valuable asset at the moment? Maybe people wouldn't touch it until the time they see fit. So that's how I see it. The three main factors that I see making it going below the support line, but we never know. Economic factor may or may not be, because there are quite a number of people believing in Bitcoin as a store of value, and they will see it a positive thing even if economy goes down. So it's a 50-50 for that particular factor. So I'll keep it at 3 factors at this moment. So let's take a look at the Wyckoff. I like to see the weekly chart more than the daily. It's less busy and clearer, less noise. Let's put it this way. So for what we have here, again, similar to what I talked about in earlier sessions, for the other 3 tokens, there is a significant resistance line here, extended from the upthrust. I am referring to the blue scenario, so let me use a blue line instead. I talked about in the previous few weeks. You can go back and check if you want to know about the detail. Basically, the yellow text are also Wyckoff, what can I say, the events, Wyckoff events. And basically, as I was talking about 2 scenarios, the yellow and the blue. So let's make it easy for now, for you if you're new to this. We're considering the blue scenario at this moment, as it's more likely. So it's possible that we have an upthrust and another upthrust, I would say, if it doesn't go above or close above this the previous upthrust set in early mid-December. So if it does go above, then we will name it upthrust after distribution. But the key point is not about how do we name them, even though there are names for them. The key is the behavior behind all these. These are all testing of demands in the market. So if there's sufficient demand, then the price can go further up. If there isn't, then it will come down. How far down? It depends on whether it's more profitable for whoever has a bigger control of the price or the stocks in hand. So if you ask if it does come down, what's the level? So by looking at the previous candlesticks over here, actually either you want to look at the open close, that's similar to what we have this week. It's around 95,000, 95,000, 94,000 I would say. That can be support for some people. Or if we look at the wicks, then it's further down. Or some people would look at this, the open of this green stick, that's around 90,000. So basically it's saying, let me remove these and draw a box here. So it's like there's a short-term playground zone again, and let me set this to current interval only so it won't mess up the daily. So basically the price is hovering around these level. If there's no significant news pushing it higher or lower, then it will still trade horizontally within this pink box. Reason being, let me ask you a question. If you are somebody profiting from this up and down, what's the reason to trigger you to make it outside of the zone that make it less predictable for people, or at least for yourself? If people are very comfortable trading between 90,000 to 105,000, then why not? There are a lot of tricks you can play within this relatively narrow zone compared to the previous price actions, but it's a very profitable way. Like, say, when you went up, the price went up. Like I said in the opening of this session, some people are very bullish and they say, oh yay, it's going all the way to the moon, 110,000, 120,000, and they set a bunch of long position here. And then whoever has the higher control or more control now pushes the price down, and before doing that they set a bunch of short positions, and then they took profit from somewhere within the box. And then when the price reached somewhere near the bottom of the box, some bearish people or some people getting bearish will say, oh damn, it's going to come down, and then they set a bunch of short positions. And what happens? The price got pushed up, and before the price got pushed up, obviously some people would have set a bunch of long position, and then they profited from it. And again, same things happen here and here. So that's how people got profited, or they profited from these 4 times in just 5 weeks. And these are not small if you have the right tool. Basically, it's an 11 to 12% increase from the resistance or the bottom. I mean the support, the bottom support to the resistance at the top. It's around 13%. Think about it, 13% in a week, and without leverage. If you have the proper leverage, then you can do the calculations depending on what leverage you're using or they are using. So that's a very significant gain, given you can do round trips within a month. So that's a little long-winded story, but I did not have a chance to explain from behavioral perspective what are actually behind all these name tags or price and volume bars we're talking about. So hopefully this explains or give a better elaboration of how I come to these observations. So thanks for joining. See you next week. Happy trading.